Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Welcome to Cut to the Chase. Today is Tuesday, the 30th of July. I'm Daniel Lam, your host for the podcast. Over the last couple of weeks, we've seen some prominent rotation from NASDAQ 100 growth stocks into the financials. A question that we've been getting is that with Biden now out of the race and the probability of a Republican sweep falling below 50%, according to the polls, does this rotation still make sense? Our short answer is yes. First of all, financials broke out of its trading range over the last few months when Trump survived the assassination attempt and his opinion polls went higher. And then financials was touted as a Trump trade because the last major deregulation in the sector was in 2018, when Trump and the Republicans were in power. Now, financials did pull back as Biden withdrew from the presidential race and the Republican clean sweep becoming less probable. However, they are now back near the year-to-date high, and this is because, in our view, financials is not merely a Trump trade. We are witnessing a confluence of factors at play here. For example, the positioning in the technology sector was and still is overcrowded, and financials is the largest sector outside of the growth ones, making it a prime candidate sector to rotate into. Of course, you need fundamental drivers, but there are also drivers there too. First of all, the strength of the second quarter earnings in the US financial sector was strong. And there is a clearer path and likelihood for the Fed to pivot, leading to steepening of the yield curve, which is positive for the net interest margin and therefore profitability for the US financials. Yes, we do acknowledge that there is less likelihood of a Republican clean sweep. But even in a split Congress scenario, I would argue that the Republicans will still be the driving force in policy direction in the next 4 years if Trump does win the presidency. That means it is either going to be 1, status quo for the financials, or 2, a non-zero probability of relaxation in regulations for the financials. So therefore, we believe there's still room for US financials to go higher from here. That is all from me for today. As always, if you enjoy this podcast, please don't forget to rate and like it. Thanks for listening, and we wish you a happy day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details, visit Market Views on the Go on our website or click the link in the description.